Welcome to TheoTRADE. This is Don Kaufman. It's October 1st, 2025. It's Wednesday afternoon. There's 12 minutes to go to the cash close. The S&Ps continue their march higher. Government shutdown? Nobody cares. It's not going to do anything to the AI trade. I mean, some of the AI spending rivals government spending. Nevertheless, let's get right down to business here. Of course, in this TheoTRADE evening update. So the S&Ps are up some 25 handles right now. Look, it's not like a blistering rally. And there are some weaker areas that probably do have an impact from some of the government shutdown. I mean, specifically, we'll cut to the chase. The financials taking a little bit of a hit, but I mean, look where we are right now. Not even halfway home to the lower edge of the expected move, but some sell side activity. But the markets overall, they don't care. They just keep right on looking at it, staring, okay, and the run goes on. I would say that I am a little bit surprised by Tesla because we all recognize Tesla exploding to the upside today, and this is largely based on like technical levels here as it starts to approach its all-time high. And yes, if you do take a look at Tesla and go back quite a considerable period of time, it is, and we are staring down the face of an all-time high inside of Tesla. You can watch this thing explode to 490. And the reason I'm a little surprised right off the bat by Tesla is they're not going to sell a car for probably a month, given the fact that everybody that ever wanted a Tesla with the $7,500 credit, it ended yesterday. So I'm going to have to guess they're not exactly selling a lot of cars out there. This is momentum. This is options order flow that's actually driving a tremendous amount of the trade. In fact, when you look at the option order flow, it's absolutely jaw-dropping in terms of the size. Oh, Tesla's going to be good for, 2.5 million option contracts trading in there today. Absolutely staggering size. And that, people, I mean, that's your marketplace. Because when you take a look at the NASDAQ, and the NASDAQ is up about 0.5%, what else is really on the leading edge of this? Hey, you want to point out Google? All right, there's a little bit of buy side to Google. You got me, it's up 1%. Meta, though, that has actually been getting hammered. Fairly precipitous drop. In fact, we look at auto expected moves. We're on the lower edge of the expected move inside of Meta. So generally speaking, what he got in the marketplace, it's a bit of a mess, okay? But Tesla, it's your market today. And again, there was a period of time where Tesla, from a market cap standpoint, wasn't really big enough to have a lot of influence. It's big enough again. It's 1.5 trillion. And I just wanted to make sure that that's on everybody's radar screen. Yeah, I know you're sick of hearing about Elon over here, but he's back, baby. He may not sell a car for the next month, but he's definitely back right now. Nevertheless, Tesla is your marketplace today. But digging a little bit deeper than that, as I was saying, the financials are weak on a relative basis. Let's kind of cut to the chase, show you some of the individual financials. You're looking at JP Morgan, okay? It's actually some fairly precipitous sell side activity. And this is where I think some of the risk is starting to bleed through, meaning that risk of the government shutdown. Look, a couple of days of a government shutdown, it's not going to impede upon the markets. It's just not going to happen, right? You start talking about, 2-3 weeks from now, okay, then we're going to have problems. And, the employment situation, which is non-farm payrolls this Friday, nobody cared anyway. I mean, we'll start paying attention to stuff like ADP reports and, some of the private sector. It's interesting. Look, the market will find a way forward. It will figure out a way to actually, price risk in. But for right now, especially when it comes to AI related underlyings, market just doesn't care, just stares, laughs, and just keeps right on moving forward. The one area, again, that is a little bit weak, so the financials, you also have to look at stuff like Walmart. I think the government shutdown has a psychological effect, okay, on a lot of individuals. So you're actually seeing a hit in Walmart, a little bit of a hit in Costco, okay? Target's actually down. So consumer staples, okay, might actually feel this as it's, again, kind of a psychological effect. Like, you're out there. Do you really want to start spending money? The economy used to be what? You spending money drives the economy. Now, it's NVIDIA spending money on CoreWeave, CoreWeave spending money on NVIDIA, okay? NVIDIA spending money on OpenAI, OpenAI actually buying NVIDIA and CoreWeave. I mean, it's absolutely ridiculous. The circle of life goes on. And again, right now, at least for this time being, the marketplace is unimpeded. Now, I am going to bring up an area of contention here. Gold. Let's just talk about gold for one moment. I've seen a lot of commentary about gold, a lot of articles about gold, and I tend to agree with one critical thesis here. Gold is rarely wrong, and this is actually pretty disconcerting at this point. By the way, okay, this is not about being long or short gold. I'm not going to discuss being long or short gold for a moment. All I'm discussing is gold is absolutely explosive to the upside. In the exact same time, the dollar is relatively flat. So if you look at the period, again, if you look at the period where gold has been explosive to the upside, let's call it, literally for about the last month, 6 weeks, I mean, explosive to the upside. We're looking at a move from 3,400 clear up to 3,900. I mean, this is a dramatic move. In fact, when you start looking at this move, even on a, kind of a grandiose time frame, it's alarming because the gold chart, okay, has truly gone what is often termed parabolic, like ever increasing slope to the upside. It's completely and utterly parabolic at this point. And I stop and I pause. And again, the thesis that I actually, adhere to, what's gold know that we don't? Why are there buyers of gold over here? And you can come up with a million different reasons. And it's inflationary, it's this, but the dollar isn't actually getting rocked right now. Usually if the dollar's getting rocked, this is risk to me. And this is a hedge for a whole lot of people. This is a trade unto itself. This is what makes me nervous right now. If I were long the S&Ps, okay, if I'm a retail client and I'm sitting at home and I'm long the S&Ps, meaning I own the S&P 500 in any way, shape, or form, whether you own individual stocks, whether you actually have like a Vanguard 500 and a 401k, I don't care. If I own the S&P 500 right now, I'm really nervous. I'm really nervous because I'm looking at gold, and gold is rarely wrong. This is a very, very intense move in a very short period of time. Gold is up 45% year-to-date basis, right? Okay, could be inflationary. I'll give you that argument of inflationary, okay, versus just, risk to the marketplace. This looks like a duck and cover at this point, especially with the dollar being relatively flat. Be mindful of it, because risk is starting to bleed through to other areas now too. You're seeing, anything consumer involved in here, including some of the financials, some of the consumer staples actually taking a little bit of a hit. All right, let's push this aside for just a second. Get a broader look at the overall marketplace. Volatility is a little unusual also. So volatility isn't really down. And I like to look at the volatility futures, right? Volatility futures are relatively flat. I know that this looks like a bunch of bricks on here because it hasn't done anything all day, but volatility is flat with the marketplace up. Okay, also kind of, displaying right here, right now, where's a degree of risk. Now, there's no other volatility indicators like VVIX. That even backed off. That's the volatility. That kind of backed off over here. There's no other indicators that volatility is about to rage in the marketplace, but it is unusual because the markets are higher and volatility is not per se backing down, not giving up an inch. Maybe they just see though that, this government shutdown is still pretty uneasy. Maybe future volatility risks go up. All right, couple other aspects in here. Trade I've actually tried to fill a couple of times in here, Alibaba. I want to talk about Alibaba for just a moment, okay? Look at the move in here. Now, I know people are going to bring up different technicals and so forth. They're like, that move is absolutely amazing. I want to buy it. I want to show you something pretty amazing here about this. This is one breach of expected move, two breaches of expected move, three breaches of expected move, now effectively four. 4 consecutive weeks. The market, the option market specifically in Alibaba, has gotten it wrong. Okay, this is actually a trade I'm going to look and try to fill again in tomorrow's trading session. And I don't want to get too specific on the trade, but the other aspect that really resonates with me, when you start opening an option chain and you look, okay, at physical implied volatility, It's completely and utterly inverted. And that basically means like, look, here's your calls, okay? As you go further out of the money on the calls, okay, the implied volatility is going higher. When you go out of the money on the puts, the implied volatility is going lower. So we have what they term an inverted implied volatility skew inside of Alibaba. With the options marketplace, hasn't gotten it right in 4 weeks, okay? Could be some wild trading here in the next couple of days. That is something I'm going to go after. Okay. Last but definitely not least, we bring up what we often bring up, which is the mother of all products. What's the mother of all products? It's the SPX. You know it, you love it. It's the SPX. The SPX, roughly speaking, has a just close to an $87 expected move this week. We are only a hop, skip, and a jump off the upper edge of the expected move. So back on the bid, the marketplace, okay, has a very high probability of hitting the upper edge of that expected move. If you're kind of curious, what is the upper edge of the expected move? Well, let me actually give you a level, because if we're going to rally overnight, this is exactly what we're going to rally to. We're trading right now, okay, 67.14 in the SPX, 67.14. The upper edge of the expected move, 67.30. If we do trade there in the morning, chicken's done. It'd be a fairly low volatility day tomorrow if we actually trade there. But again, anything's still plausible. As I said, there's some unusual signs on the screen right now. And again, the divergences, they're huge. I mean, financials are getting hammered out there. Some of the consumer staples are getting hammered out there. The volatility refuses to kind of back off, even with the marketplace up. Dogs and cats living together. A negative advanced decline line with markets up because, you know, it's an AI world. You're just living in it. But I'm going to tell you once again, markets, government shutdown, they don't give two beep. Thanks, everybody, for joining us here at TheoTRADE. Have a wonderful evening. Bye-bye.